you don't believe in this idea of a quote-unquote sell America trade because the U.S. markets outperformed all the other markets in the world last week, the S&P up over 5%. Please continue.
Yeah, I think that's very important, right? Because the whole concern is that, well, dollar's going down despite interest rate differential having moved in favor of the greenback. Normally, interest rate differential and the dollar generally move in lockstep. We've seen a divergence, there's no question. That's the cause of concern about capital flight. But if that were really the case, if capital flight was really the driver behind the dollar sell-off, then as I said before, the U.S. equity market should have underperformed. And yet the U.S. equity market massively outperformed. So I think from that point of view, if investors are fleeing the U.S. assets in general, why aren't they fleeing the U.S. stock market? Well, I think rather, I think much more likely is about the fact that trade war was seen as very bearish for the rest of the world, bullish for the U.S. dollar. To the extent that the market is more relaxed about the outlook for the trade war, I can understand why people decided to basically, let go.
Well, David, you're contradicting yourself just a bit. Yes, the U.S. markets did outperform, but in all fairness, we had a lot of data that foreign buyers were sellers in the 5 days after the tariffs were announced. So that's point number one. Number two, the dollar's actually declined. It's declined against, the basket of currencies overall. It's declined about 4% when you look at the dollar index. And the euro has strengthened quite significantly against the dollar since April the 2nd as well. I'm looking at the euro right now. It's up almost 5% since the tariffs were announced. So isn't that a sign that people are moving away from the U.S.?
I think yes and no, because I think the way people are starting to understand after what happened last week, that this is not a global trade war between the U.S. and the whole world. It is a trade war between U.S. and China. This is why the RMB is underperformed. This is why the U.S. dollar is underperformed, because people think that now it's mano a mano, that the architects behind Trump's trade war have designed this trade war in order to basically destroy China's economy in order to protect the U.S. hegemony. So people think that this is going to be U.S. and China duking it out. Okay. So I think from that point of view, U.S. and the RMB have underperformed. That makes sense.
David, in all fairness, okay, if that's how you see the whole positioning right now, Wall Street Journal out with an article today saying basically 5 things to watch. One of them was a potential sell-off in the 30-year. If we do see a sell-off when it comes to the 30-year, what does that say to you?
I think that will be obviously that will be a concern, but you also have to realize the hedge fund community so far is struggling this year so far. Yeah, they outperformed S&P 500, but they underperformed their basically whatever. They're still down probably a couple of percent. So people, if you look at the latest CFTC numbers, the market, the hedge fund community in particular, is very short the dollar and very short U.S. treasuries. They're short all the way from 5-year up to 10 years. So from that point of view, this whole idea of selling the U.S., this has been very much priced in. It's one of the most popular trades right now. Okay. It's arguably a crowded trade. This is why I actually like buying treasuries here.